Hey guys, what's up? Alec back with the daily stock market, and let's start this one off hot, talking about some good stocks. Tesla's the first one we have to talk about. We're going to talk about 10 other stocks, so make sure you stay throughout this entire video so you're prepared throughout the rest of this week. We're going to go over stocks to be watching and adding to your watch list, and also price points to get in. We're going to make it super simple where I'm buying, where I'm selling, and everything in between. So first up, we have Tesla at $775. I know a lot of people are shareholders of Tesla. That's why I wanted to start this video out with Tesla. Up 5% in the last month, 13% in the last 3 months. Michael Berry was betting against them, taking out puts, and Tesla decided to go up. They also didn't seem like they were going to get past the resistance right at $760, but they broke above that to the $775 territory, and they're heading towards $800 per share. In my opinion, Tesla will go down to around $700 to $600 again. $700 where I start personally buying slowly, dollar cost averaging in, but as soon as it enters that $600 range, that's when you take it a little bit more seriously and start loading up more on Tesla. That's what I do. We have a $2 billion lawsuit coming against Tesla from dismissal what investors should know. In case you forgot about Nikola, which is NKLA, which is a horrible company to invest in, by the way. So I'm sure this won't get passed, but in 2018, they have a lawsuit going over the similarity design between the two companies' semi-trucks, okay? The lawsuit could come officially to an end with Nikola ending communications with court officials, which is what I was saying. It's probably not going to amount to anything in the end. Nikola filed the lawsuit against Tesla for patent infringement. Nikola accused Tesla of mimicking its designs on items like wraparound windshields and mid-entry doors and aerodynamic. We also see Elon Musk's Tesla accuse Rivian of poaching employees and stealing battery secrets, okay? So what happened, according to Bloomberg, Rivian hasn't stopped raiding Tesla's staff and stealing highly sensitive proprietary battery technologies. All right, Rivian, so that could be a good one to watch. I know they're set to go public pretty soon. So it could be a good idea to have your eye on Rivian if they're stealing all the secrets from Tesla. Last year, Tesla filed a lawsuit against Rivian, and Tesla said it is the #1 target from which to acquire information. Other than lawsuits, we see Tesla deliveries surging, so that's a great thing to see. And we see the Tesla is actually delivering 241,000 vehicles to the customers in 3 months, ending in September. It said Saturday, up from 139,000 vehicles during the same period last year. Analysts surveyed by FactSet forecast Tesla would deliver roughly 227,000 vehicles in this quarter, so they were about 15,000 vehicles over the analyst estimates, which is some good news. The result positioned Tesla to easily achieve its full year goal of increasing deliveries by more than 50% of last year's total and nearly 500,000 vehicles. Wow. The company has put a total of roughly 620,000 vehicles in customers' hands through the first 9 months of the year. Unfortunately, we do have to move on into the next stock. Otherwise, this video is going to end up being an hour long. We might even get only through 5 stocks in this video. So we already talked about Tesla. Let's move over to Moderna, mRNA, down 11%. Okay, so that's why we're talking about it, guys. Down 21%. A lot of people don't know what's going on with Moderna right now. 21% they're down. They're at a great support right now, and they're actually below the support because, as you can see, the support was 370, 360, and it's below its 340 right now. So in my opinion, it's pretty risky to buy into Moderna when they're falling like a rock right now. But if it gets below $300 per share, that's when Moderna is going to start really getting attractive, especially for long-term holders, because Moderna is here to stay. They're probably going to be around for at least the next 5 years or longer. So if you can consolidate a position and solidify a position in Moderna right around $300 per share or under $300 per share or as close to $300 per share as possible, that's probably going to be the most beneficial for long-term. They're down, 21% in the last week, which is a big movement for 1 week. So consider that, swing traders. All right, so that's a big movement. They can easily bounce back and go up 5%, 10% in the next week or 2 weeks. And you can have some benefits there if you want to take a little bit more risks. You can also see the volume for Moderna is very high. 30 million, 34 million on volume for Moderna right now. Now you'll see the bears, why Moderna and other vax companies are plummeting. So we'll click that article in a second. And then you can also see why success of popular brokerage Robinhood may not continue and where savvy retail investors may turn instead, according to Is Robinhood Reputation Tainted, which you can always read on your own free time. And then you'll also see the Virgin Galactic soars after FAA clears flight, but the analysts remain bearish. The point is made that the valuation on Virgin Galactic stock is unchanged by recent news. So if you want to look into those, message me on Instagram and I'll send you the articles. But we're looking into this one right now, and we're looking why Moderna and other ones are going down. The COVID-19 pandemic proved to be a boon for many biopharma companies that benefited from their foray in the development of vaccines or treated against the novel coronavirus. Shares of most of them reach incredibly high valuations, even discounting for the COVID opportunity. What happened? Most COVID-related biopharma stocks are moving sharply lower Friday. Shares of Moderna and others came under significant selling off pressure for most of the week. The weakness was in part due to the broader market sell-off, triggered by higher bond yields and expectations of removal of monetary policies. Additionally, the prospect of the pandemic ending soon is seen as negative for these companies, which are heavily invested in their vaccine therapy programs, except for some that have taken their programs past the finish line. Others are yet to realize any returns on their investments in the COVID programs. Wow. So that might be something that you want to reread. If you want to pause and read the rest of the article too, there's not much more to it. But here you can actually see some prices of the other vaccine companies. Now, Netflix is the next one we're going to talk about, the third stock in this video, and it's up 4% in the past week. We see a lot of success globally with Squid Games topping the charts. They're also up 15% in the past 3 months. So investors are wondering, is now the time to invest in Netflix, even if I'm a long-term holder? Now, I'll tell you right now, for my Roth IRA, I am dollar cost averaging into Netflix currently, okay? But for my swing trading accounts, I typically like to buy below $500 per share, okay? Below $500 per share, I'll say it again. But 550 is when it starts to get attractive. Below 550, I'll even start dollar cost averaging in a little bit heavier for a swing trade. But if I am going to look for some short-term profits, I'm buying below $500. It's happened many times before. You can even see a pattern of consolidating for a long time between July 17th, 2020, and all the way to current day. It's recently broke to new all-time highs by breaking numbers, subscriptions, and competing with Disney Plus. All right, Disney Plus is another stock that we talked about in previous videos. So make sure you follow my YouTube and subscribe if you want to be notified on all things stock market. So what are analysts saying about Netflix? Here we actually have an average of a 2% upside over the next 12 months. And we have some analysts pricing as high as above $700 per share, all of the way to $780 per share. Right now, the stock's sitting at 613, so that would be a nice upside. But if we see where these are actually coming from, you actually see it. We have a top 25 analyst from Evercore. Mark actually reiterated 6 days ago. He thinks that in 12 months from now, it'll be around $695 per share, which I pretty much agree with. His success rate is 70%, which is very high, and his average return is 44% per year. So he's a pretty trustworthy guy. We have other 5-star analysts saying 650, 680. We have one 4.2-star analyst coming at $500 per share, but he only has a success rate of 66, and his average return rate is only 9.3%. And come on, look at that guy. He doesn't look like a trustworthy guy. No, I'm just kidding. I shouldn't be saying that. But Mark here, very trustworthy guy. We like him. Justin Patterson, 645%. We have Doug from JPM Morgan, and he's coming in at 705, and he reiterated that 26 days ago. All right, next up, we have Penn National Gaming, and this is one that we've talked about on the channel plenty of times before. We were talking about buying them. They're up 8% on Friday. Wow. All right, so making a good move. They're up 5% in the last 3 months, which is not much movement, and they've gone down from all-time highs very significantly. We saw around a 40% drops from all-time high, or 50% from all-time high to their low point in August 19th. They've bounced back some from them, and I think that they are a company that will continue to bounce back for long term. They'll be above $100 per share again, and they're a good competitor to DraftKings. So if you're familiar with DraftKings, Penn can be worth one looking into. We're up 6.3%, so no big deal. We're looking for at least a 30% gain on them, and they have a PE ratio of 29, market cap of $12 billion, which is interesting. But if you actually look at one of my more recent videos, I think I did it last month, and it was DraftKings versus Penn and which one's better overall. So I definitely recommend watching that video if you're a sports investor, you like sports gambling, you're early to that arena. That could be a good video for you. But we have DraftKings now pulled up, which is the 5th stock of this video, down 16% in the last month. Okay, so is it a buying opportunity? I personally think it is. I like buying under $50 per share pretty slowly, dollar cost averaging in, and holding for long term, or selling above $70 per share could be beneficial as well, depending what you're trying to get out of that stock. So make sure you keep setting goals and you're staying on track with your goals to make sure that you're getting profitable gains. All right, just because I'm up 10% on something like DraftKings doesn't mean I'm going to be selling out anytime soon. All right, my goals are bigger than 10% gains, so I don't want to sell yet. I typically want about a 30% gain on something like DraftKings, and then I'll consider selling profits. But I won't sell all at once. I'll take a little bit of profit at a time, a little bit off the table here, a little bit off the table there. Oh, it went up 5% more. Let's take a little bit more off the table. So that's how I like investing, locking in consistent gains and consistent profits. If you guys rock with that, make sure you subscribe with post notifications on to the daily stock market. And if you're more into NFTs and crypto land, cryptomania, because cryptocurrency is going absolutely bonkers right now, and NFTs, we're even seeing institutional money moving over to things like Ethereum and Bitcoin. So make sure you follow the daily cryptocurrency on Instagram. I post Instagram TVs, IGTV videos. They're nice, long, length, in-depth videos of NFTs, coins to be buying. If you want to get on the close friends list, I do have that for the daily cryptocurrency as well. And if you're looking to buy an NFT and you're not sure how to buy or purchase an NFT, I actually have an hour-long program that teaches you how to buy an NFT specifically in my crypto transformation course. So I definitely recommend my crypto transformation course if you're looking to get into the crypto markets and become a professional crypto investor. Cryptocurrency has the ability to make more than the stock market very quickly, but remember, there's more risk with cryptocurrency. So you have to balance risk versus reward, and that's why I enjoy having the 2 separate pages, the daily stock market and the daily cryptocurrency, because it allows me to balance everything the right way. I don't have too much money in the cryptocurrency space, only about 20 to 25% of my money, of my portfolio, I should say, is in the cryptocurrency space. Majority of it is in stocks, long-term safe stocks for long-term to build and accumulate wealth and not just look for a quick buck here or there. So guys, if you enjoy this type of content, share with a friend if you think that you can find some video. Subscribe to this YouTube channel, The Daily Stock Market. Make sure you check out my Instagrams, The Daily Cryptocurrency, if you're interested in that too. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.